Welcome to day number 6 of the free TradeLikeVu bootcamp, where we'll be talking about market structure. So we are going to finally dive deeper into the technical analysis and all the technical concepts of trading. So let's jump straight into it. We are talking about market structure today, okay? So that you understand how to read the markets, how to read the structure, like how price is moving within the markets. And there's basically 3 types of phases or states that every market is always in. And the first one being the bullish market structure, which means price forms higher highs and higher lows, right? So basically the market that you're looking at is moving upwards, just like this, okay? Price will like always move in this pattern, right? It doesn't move like only upwards. That doesn't happen. Price always needs to do corrections. So for example, in a bullish market structure, you have an expansion. Okay, so you have a move upwards, then you have a correction downwards, then you have a move upwards, then you have a correction downwards, and then you have a move upwards, and so on. Okay, that is bullish market structure. The second state that the market can be in is the bearish market structure, which means quite the opposite. So price forms lower lows and lower highs, all right? So price comes from somewhere up there, comes down, it expands down, makes a lower low, then it corrects upwards a little bit, makes a lower high, then it goes downwards again, makes a lower low, corrects again, a little bit upwards to make a new lower high, and then it goes down further, okay? So that is bearish market structure. And then we have a third phase, which is the consolidation or ranging phase. So it's basically moving sideways, okay? So it's not a clear bullish market structure and it's not a clear bearish market structure. So then it's a consolidation or a range. So price is moving up and down, like bouncing up and down from a range, right? From a higher range and from a lower range, all right? So it basically looks like this, moving sideways, okay? So that's the 3 types. And there's also within these 3 states, we have 4 phases of market structure. So every move in the market can be broken down into one of these 4 phases, okay? So for example, if we have a look at the bullish market structure, okay? I'll take that as the example. We always have an expansion, okay? An expansion is a strong directional move. So price breaks out and accelerates, okay? For example, all the green lines that I have drawn in right here, that are called expansions, right? So in a bullish market structure, that is a bullish expansion, right? So a bullish strong move upwards. Then we have the black line, which is the correction, or which we call the retracement, all right? So we have the retracement, and then we have another expansion. Boom, okay? Move upwards, and then retracement, pull back again, and then another expansion upwards. So that's an expansion, okay? And the retracement or the pullback, you can use both terms, is when the price makes a correction. So as I told you earlier, markets are not moving in one direction only, like it doesn't expand infinitely, right? So it's like somewhere it has to do a retracement, okay? So price temporarily moves against the trend. That's called a healthy correction, okay? So it comes down, moves up, comes down, moves up, okay? So the black line is the retracement. And in the bearish market structure, it's basically the other way around. So if we go back, this is the expansion, then we have the correction, expansion, correction, expansion, okay? So basically very simple. Then the other 2 phases of market structure are consolidation. So basically the price correction, or when the energy builds up before the next move. That is basically, if you remember from the previous lesson or the previous episodes, when I explained the power of 3 to you. So it's basically the accumulation right here, right? Something like accumulation. And after that, when price build enough energy, it goes either upwards or downwards with strong momentum, so it expands, right? So That is consolidation and range. And then we have the reversal, which is basically just a special type of expansion, I would say. So for example, if we have a bearish market structure right here, so price goes downwards, all right? And then price suddenly reverses, okay? It reverses, so it expands upwards in the opposite direction, okay? So the trend basically completely changes direction. That's it, all right? And now I want to actually show you some real examples in the markets, on the charts, on the live charts. So let's go there. So let's start with the bullish market structure, all right? So as you can see right here, I'm on the NASDAQ, right? On the NASDAQ mini. And within this 15-minute time frame, you can see this bullish market structure, okay? If I can draw it in for you. So we have basically a push upwards, then we have a correction, push upwards, correction, push upwards, correction, push upwards, correction, push upwards, okay? So that is basically how a bullish market structure looks in the real markets. Let me just turn this off so that doesn't annoy us, okay? So as you can see, price is not like cleanly moving upwards in a solid line, as you can see, okay? Because if we zoom in or look closer, you can see that price makes this, right? It doesn't like always move cleanly in a line like this. It always does like some small corrections also within the smaller time frames, right? So it doesn't matter on what time frame you're in or sorry. There's always a pattern that you can see within the markets. For example, if I now switch to the 4-hour time frame, okay? Let's switch to the 4-hour time frame. You can see the same exact behavior in the markets as well. So like right here, you also have this uptrend, right? So as you can see, we are clearly moving up, but it's not looking as clean as the examples that I've shown you before, right? It doesn't look like this. Of course, price is moving more like this, right? You see? So it's doing all these things throughout the whole push upwards, right? So that is how markets actually move in the real markets. And that's why it's also hard to precisely predict the markets when it's gonna reverse or when it's gonna like push upwards or when it's gonna do the retracement, right? So that's why market structure or reading the markets is just a way for us or a way for our strategy to anticipate price as good as humanly possible, right? So that's the goal of reading markets, that's the goal of defining the markets in a way of market structure, right? So for example, this is the 4-hour time frame, right? And we have a bearish market structure right here, okay? So we start up here, we go down like this, all right? And it makes something like this, okay? It consolidates a little bit. Now it's going clearly down again, okay? So let me actually use this one, okay? So we are going down like this, okay? As you can see, then we correct a little bit more. Then we go down, but we can't break this point, so we consolidate, okay? As you can see, this is a consolidation right here, okay? Not too clear, but you can still see it. And as soon as we break this point again, we are in a bearish market structure again, okay? As you can see, and then we push lower, all right? So this phase right here is more of a consolidation phase. All right. And as soon as we break out of this range, so basically we started with a bearish trend right here, right? And from here on, we are consolidating. And after that, when we break through, we finally continue the downtrend, right? Until we finally reverse. So that is a good example of a reversal, as you can see, okay? So we have a bearish trend first, then we consolidate, then we continue the bearish trend, and then we reverse, okay? So that is basically how to read the markets. All right, so let's have a look at some other examples. So for example, if we go on the daily time frame, all right, let me actually also remove this ATR. So yes, so it's basically always the same, as you can see. Okay, and on the daily time frame, as you can see, it's even a little bit clearer, like in terms of, you can see it, okay, in terms of price movement, it's way clearer than on the intermediate or lower time frames. So for example, this is a clear uptrend, right? So if we draw in the lines, just for example, okay, just like this, then we go upwards, 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 push, 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 push. All right, so we are going upwards. So yeah, that's basically it. Let's have a look at another example of a accumulation. Okay, I think that is a good example. So for example, we have an uptrend first. Okay, uptrend, 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 and here we consolidate a little bit. As you can see, price is moving sideways, right? And then after that accumulation, we have the distribution, right? If you remember the lesson from the power of 3. So we go downwards, we distribute downwards, right? So that's basically it. Yeah, that's the lesson for this episode. Now I want you to actually go into the live markets and just mark out all the market states and market phases. All right. So the 3 market states are bullish market structure, bearish market structure, and consolidation. And the 4 market phases within each state are the expansion, which is the move upwards or the move downwards. Then we have the correction, which is the retracement or the pullback, right? And then we have the consolidation, which is right here. Okay. And then we have the reversal, which could be seen as this move right here. Okay. So I want you to actually practice to read the markets, practice to just, define the different market states and market phases. All right. So that's the assignment for episode number 6. And that's basically it for the market structure. I hope you understand everything very well. And if not, don't worry. In the next episodes, we will dive even deeper into technical analysis, also into market structure. And trust me, if you stick to it and if you do the work, if you put in the work, and if you actually practice on reading the charts, you will be able to become a master of reading the charts, master of technical analysis. So thanks for watching. Comment episode 6 in the comments if you've made it to the end, and I'll see you in the next episode number 7.